Hey guys, TommyBryson here, and right away, let's skip the BS, okay? First things first, what I'm going to teach you in this video is how to invest in less than 10 minutes. So to trust me, you need to know that what I'm doing is basically working before you click off this video. So here's how much money I've made so far. I've made $17,000 right now, even though the entire stock market is basically down. Meaning that what I'm going to tell you in this video, it works. And the idea is that this is called the B method. B method stands for boring method. It's what the people on this channel basically do, and we call ourselves the long-term team. Now, this method is fully automated. It's very low risk, and it's gonna make you off the bat between 10 to 12%. And if you get very smart, you can get a little bit more every single year. And by the way, it makes me right now per month around $500 in dividends. And before you say, Tommy, you have so much money in there, the answer is I started out not with $20,000, but just $7 in my account a few years back. So we don't have enough time here, so let's get right into this video and break everything down. Do me a favor, smash the like button on top if you're new here, subscribe to the channel, hit the bell to get notified. Now, right away, first thing I want to break down is this. Tommy, what app are you going to be using to do all of the investing? The app I use or brokerage account is going to be with M1 Finance. What we're looking for is a platform that is one, free. We don't want to spend money on nonsense. On top of that, has great customer service. And on top of that, is easy to use and has a bunch of tools to make the entire thing automatic. Because this way, all you have to do is send money over there. But for the rest of your entire life, everything is being done automatic. You don't have to keep diving in and changing things back and forth. So that's the application that I currently use myself. M1 Finance. I have a link down below. If you click that link, it takes you to my portfolio and it shows you exactly what I invest into. Don't click it right now, click it after the video, because in this video, I myself, I'm going to click that link to show you all this information, so don't worry. Now, second thing, okay? Tommy, what investment style are we going to be using? Now, obviously, there are lots of investment styles, but the one that I'm going to teach you is all about boring, passive, good money, and great dividend returns. But you can also have, for example, stock pickers. The reason I'm not going to teach you that in this video is because those people that go ahead and try to pick stocks, individual companies, that takes, to do it the right way, takes hours of research every single day. Can't put that in 10 minutes. On top of that, the people that don't do the research and just pick companies, they're gambling, and then that's losing you money, and that's not what I want to do here. So the method that I'm going to teach you, and by the way, you also have the people that grab their money, give it to Paul and say, hey, Paul, can you invest this money for me? And Paul charges them a bunch of money, and that adds up to a third of the return. So I don't want to do that. I call that sucker investing, when you give your money to somebody else and then before you know it, they take all your money. Not what I want to do with all of those fees. So this method is very simple. It's the B method, the boring method. We're going to be investing into index funds or into ETFs that basically track those same indexes. An index fund is basically, we're going to invest into an entire bucket filled with a bunch of stocks that track a certain part of the stock market. It's that simple. Don't overcomplicate it. And this is basically very low cost, very effective. On top of that, very low risk if done correctly, which I'm going to teach you in this video. Now, enough talking, because what I want to show you right now is basically the investments that we are going to be making. Now, I learn best by visual stuff, okay? Everything to me has to be visual. I'm a visual learner. So right here, if you go to one of my videos and you go to the description and you click this link right here that says, for example, or get my course, by the way, but click this link right here that says M1 Finance link, click it. It takes you right here. The link, by the way, is already here, loaded up. But as you can see right here, in the past year, we've lost 9.87%. Don't worry about this. Everyone is down right now. But over the past 3 years, we're up 23%. Over the past 5 years, we've made 38%. So we are making money. Don't worry about the short term. That's why we call ourselves long-term team. But overall, we are investing into 5 different companies, 5 different index funds, but in this case, ETF that track those same indexes. And here are those 5 investments. And by the way, this makes us 2.2% in dividends, which by the way is great. And on top of that, it only costs us 0.07%, which by the way is taken from the investment. So don't worry about paying any fees whatsoever, okay? You don't gotta worry about that. But overall, these 5 investments are as followed. The first one is called the Vanguard S&P 500 ETF. Inside of here, we put in 40% of our money. What is this, Tommy? This is basically a bucket filled with the 500 largest companies in America. Why do we invest so much in America? Because believe it or not, America is #1 right now. So we put our money in the best place possible because we have the best companies out there right now. Plus, America is where it's at. We're Americans, let's be real. Second, we also have small cap ETFs. These are made up of 97% American companies, but they're smaller companies. Smaller companies have higher risks, but they also have higher potential for massive returns. So inside of here, we put in around 20% of our money because we also want to make sure these are more stable. Obviously, these are higher risk, but we want to have some higher risk because we want to have some higher returns. Also, stabilization is what we want. Third, we have Vanguard Developed Markets ETF. We put in here 20%. This right here is made up of not US companies, but non-US stock. Basically, big companies outside of the US like Toyota and Nestle, a lot of big companies outside of the US because although we're #1, to be #1, you have to have a #2, #3, #4, #5. So we want to have money in those also because if we don't do that well one year, we want to have money outside of the US to make sure we make money over there too. That's the idea right there. Now, the fourth investment is VNQ. This is a Vanguard real estate ETF or REITs. Basically, real estate investment trust. We are investing into real estate via the stock market, okay? And the idea is if the stock market is down, doesn't matter because we have money in real estate. And real estate isn't really combined with the stock market that much. That's why we have money in here. Lastly, only 10% by the way, because not that much money in there, because not that great returns. And then lastly, we have VWO. This is basically Vanguard Emerging Markets. This is basically investing into smaller countries, smaller investments, a lot of potential for wins, but a lot of risk. So that's why it's only 10% of our investments. Now, overall, use common sense here. How can you lose all of your money? Literally, the US has to go down. The small cap companies have to go down. The entire industry outside of America has to go down. Real estate market has to shut down. And on top of that, emerging sectors outside of the US, outside of the big nations, they also have to go down. The entire world has to basically shut down for you to not make money. That's why I use this entire investment method. Now, the last part of this video that I want to break down is basically how much money to invest and how frequently to go ahead and invest, okay? The answer is simple. A lot of folks, they want to do way too much money at once and then they stop or they need the money for something else later. So my advice is stick to an amount you can do forever. Forever, okay? So 10 to 20% is my sweet spot. Right now I'm at 20%, but I wouldn't mind being at 15% if that's all the money I had available to invest forever. That's the idea. And by the way, I recommend you pay off your debts first, you have an emergency fund, and that way you're covered in case anything goes wrong before you start doing this stuff, okay? Because we can have parts in the market when it's down for a very long time, and that is natural. Now, 10-20% is the rule. How much to invest? How often? The answer is you want to invest every time you get paid. That is my rule, or at least once a month at the same time that same month, okay? That's the idea. Why? Because if you invest when the market is hot and also cold, you get room temperature. If you're investing when the market is high, when it's low, just all the time, what do you get? You get the average return. And that way you're not taking that much risk because you're always buying and you're always inside of the stock market. If I could give you just one tip before I end this video right now, the answer is it is not about time in the market. It's all about putting time inside of the entire stock market. That is it. That's all I have for you guys. Click that link down below, Tommy Finance. to copy my investments, we're going to copy them. And on top of that, if you want a book recommendation for this, I recommend a book called The Little Book About Common Sense Investing by John C. Bogle. It's a great book. Here it is right here. Like this video, subscribe to the channel, hit the bell to get notified, and as always, long-term team officially out.